10, 9, ignition sequence start. 6.
Hello, and welcome to episode 11 of Launchpad, Rocket Fuel's interview series with people in the Rocket Pool community and those who are building on Rocket Pool. Today's guest is Marc Zeller, who is the founder of Aave Chan. Aave Chan is Aave's DAO arm and the service provider for Aave. So, Marc, welcome to Launchpad. It's so exciting to have you here because you've been in the Rocket Pool news a whole lot recently with some of the proposals you've been putting through to Aave. Before we start talking about the stuff that you've been doing with Rocket Pool, let's talk a little bit about who you are. So can you tell me a little bit about yourself and then we can start talking from there.
Sure. Thank you for inviting me to the show. And it's always a pleasure to meet the communities. So about me, like the short path is that I started my crypto as a professional in 2015 by being one of the co-founders of Ethereum France. As everybody can hear it with my accent, I'm French. I think it's very hard to hide that. So I co-created the non-profit Ethereum France to share, like, organize at the beginning. It was like technical meetups and events around Ethereum. Then we created Aave Chan and then HCC conference, which is the largest Ethereum conference in Europe. The next one is in July. So if you manage to get a ticket, they are very hard to get. Usually it's fully booked in a few minutes, but if you manage to get a ticket, you are more than welcome to see us in Paris. I work at Consensus in 2016. That was my first official blockchain job. I was working in the research team on something weird at the time called a stablecoin. So no, stablecoins are bigger, but DeFi was not existing in 2016, and it was the early days of Ethereum. So it was like a pure research at the time. Then I left Consensus. I work for a crypto asset service provider as an analyst, and I joined Atlant in 2019 to prepare for the transition from the Atlant project to the Aave project. Aave launched in 2020, and I spent more than 3 years at Aave as the head of developer relation and integration lead. And a bit less than 6 months ago, I left the Aave company to found the Aave Chan initiative, which worked not for the Aave company anymore, but directly for the DAO. And now since a month, I'm a service provider directly to the Aave DAO. So I'm paid as an entity and as a person directly by the Aave DAO through a budget that has been approved by the Aave token holders.
That's amazing. Thank you so much for that quick summary of who you are and how you got to where you are now. But let's actually take a step back right into the beginning of your crypto journey. So how did you hear about crypto? Like, when did you hear about crypto? What were your thoughts at the time?
So I heard about crypto around the first cycle of 2013. And all the mess back then, because like Bitcoin like boom in terms of volume, in terms of first adoption, and obviously the Silk Road story made quite a fuss in the media back then. So I was like really close to more technical circles, so it was like something on an interest. And my first impression of Bitcoin back then, it's a great idea, but it would never work because of the whole idea of having a purely deflationary currency that is meant to be a peer-to-peer payment system and decentralized with 10-minute blocks and 1 megabyte block make absolutely no sense at scale. The thing is a great idea. It's completely decentralized. It's completely secure. I was convinced of that since the early days, but I was absolutely not convinced about the scalability and usability. So for me, like, Bitcoin was a great experiment, but not something that will take any traction. Obviously, I was very wrong, like many people at the time, and I will be much more rich if I was less skeptical back then. But that's part of the game, obviously. And in 2015, a very good friend of mine. So that was my first impression. And then in 2014, we got the alcohol era. All the Litecoin was 2011, but in 2014 we got a lot of Bitcoin clone without any added value.
Yeah.
And at that point, I was like, okay, that was a great idea, but no, I'm sure it will never work because anybody can create Bitcoin out of thin air by just copy and pasting code. So it was a great experiment. That's a shame. Everybody is greedy and want to launch their own Bitcoin, so Bitcoin will have no value. I was wrong as well, but that was the case. And in 2015, a very good friend of mine, which is a developer, and co-founder of Ethereum France, that became after co-founder of Ethereum France, told me, oh, there's a new Bitcoin that has been created and it's so cool. And I was like, no, there's the new Bitcoin every 3 days. It's all shitcoin, is no value, there's no added value. Hey, don't talk to me about this shit. I was like completely rejecting what he was saying to me. And he said, no, wait, it's called Ethereum and there's smart contracts. And that was the beginning of a journey that is 8 years long
8 years,
now. Yeah, that
amazing.
was exciting because he talked about he sold me the concept of smart contract to me, and then I spent the next 3 months day and night on Reddit and trying to understand what is this ecosystem and try to contribute in my own ways to the ecosystem. And I guess I never left.
That's amazing. That's so cool.
Mm-hmm.
So in the period between 2013 and 2015, were you like investing in crypto? Were you working on any crypto projects on the side, or were you just like kind of watching it from afar?
Of watching it from afar. So I
Yeah.
invested at the top of 2013, and obviously I lost money like everybody else.
Yeah.
And then I don't remember I bought some shitcoin in 2014 because I was
Yeah.
like, no, it doesn't work. So I sold my Bitcoin for almost nothing back
Yeah.
then. Also very big mistake in insight, but
Yeah.
that's part of the game.
Of course.
Otherwise, everybody will be a billionaire.
Exactly.
And no, after 2014 and the shitcoin era, I was like, no interest anymore in the ecosystem. So,
Yeah.
thanks to my friend, I came back to crypto. But my first journey in crypto was not that important.
So when your friend told you about Ethereum, had the Ethereum actually launched then, or was it like still pre-launch?
So we were at the end of what we called Frontier Network, which was the
Mhm.
test net.
Yeah.
And if I'm not wrong, the name was Olympic. Maybe it
Yeah.
was Olympic. Yeah,
I think
the
so.
first mainnet. So it
Yeah.
was like the about to launch the mainnet at that point. So
Nice.
Ethereum was very, very cheap back then.
Nice. Yeah. It was like, I think in pre-sale, of course, it was 2000 ETH for one Bitcoin. For a while, it traded under $1, but it didn't stay there for long, right? It went up to like $10, $20 quite quickly, I think.
$10 quite quickly, yes.
Yeah.
I think in September, I think my first buy on it was Poloniex at the time. Also
Hmm.
something that doesn't exist that much
Yeah.
anymore. But
Yeah.
I think on Poloniex in September, or maybe the figure are wrong, but people can verify. So don't trust me, verify.
Yeah.
The price was below $1 in
Mhm.
the beginning, 2015. And as early as January, February, March 2016, the price was $10 already. Like
Yeah.
the price did like 10x, 100x in a quarter or something.
Yeah. That's amazing. So, you discovered Ethereum through your friend. So then what you said, you spent 3 months reading everything you could about it, like going down all the rabbit holes. Like, why were you so passionate about it? What was it about Ethereum that really like captured your attention in a way that Bitcoin or the other shit coins of that time didn't?
So the idea of having immutable, permissionless, and decentralized application. So really, this concept of decentralized application was for me, and still is after 8 years for me, absolutely groundbreaking in terms of it's a technical breakthrough.
Yeah.
And I think we don't realize that much yet because obviously the space is still a lot immature, but all efficient and the real added value of decentralized application. Yeah, I think it's really hard. Like for example, when most people, like a lot of people, are used to DeFi now, and they are used to swap on Uniswap, even if it's a Saturday at 3 a.m. They are used to take a position on Aave, even if it's a holiday or something like that. And when you go back to traditional finance world, you are like, what the fuck? What is this? Is this like a prehistoric era or something?
Yeah.
Like it doesn't make sense. Like the added value is so high that it's very hard to go back.
Yeah, absolutely. That makes so much sense. And I think that's what pulled a lot of us into it as well, right? Like when you see just how much of a change it was from other cryptos, and of course, from the TradFi system, it's just leaps and bounds ahead of that. So when you joined ETH in 2015, at that time the community was really small, right? Like, so you said you were talking to people on Reddit. Like, was it mostly Reddit that you were talking to people on? Like, what kind of conversations were happening back then?
Yeah, so the main it's funny because it's completely changed, because right now Reddit is like very low quality conversation, to be honest.
Yeah.
But back then I started as a miner, so I was like very interested into DIY building stuff. So obviously I got some GPU and start mining Ethereum, because it's always fun to mine your own cryptocurrency instead of just buying it.
Yeah.
So I was in the Miner subreddit, and if you do some archaeology, you may find like some old post of mine, like they're discussing about the gas price and how to optimize a mining rig, and the Ethereum main Reddit subreddit. And also, if you do some archaeology, you will find the post I made to create the Ethereum France. I think we used to call that at house back then, and yeah, that was the beginning of the conversation. And
Yeah.
then slowly, and not that much at the beginning, it was a complete reverse, and most of the conversation to Twitter.
Yeah. So you were
But
one of the early like crypto Twitter people there. Like you joined Twitter in like 2013, but I guess were you talking about other things before you started kind of like talking about crypto? Like how was that?
No. I started. Well, I created an account like everybody, but not participating. But I
Yep.
started to use Twitter from the 2016 to talk
Mm,
about crypto, like
I see.
mainly about crypto. Yeah.
Yeah. So ETH France then like was a hub, right? And I guess because the ETH community was so small at the time, you must have been talking to people like Vitalik and Gavin Wood and all these like really early like Ethereum like core people, especially after you started working on consensus. We'll talk about that next. But how was that, seeing Vitalik in Reddit? Because he used to like post in Reddit quite frequently before, right? Like, did you feel like there was some kind of like freedom of information in a way that like doesn't exist in TradFi? Like, how was that experience for you?
Yes, completely. I think it's something that we even know. Obviously, the ecosystem is bigger, and people are more and more busy. So it's sometimes a bit harder to reach someone, because if you have like 100 inbox per day, you cannot answer to everybody, or otherwise you don't do actual work.
Yeah.
But I have the feeling that in crypto, you can just send a DM to anybody, and if you are lucky and the guy on the other side at some time, he will answer to you. Like
Yeah.
I think this podcast is a good example. You just send me a DM like randomly on Twitter. I was not aware of the show before. My bad. Sorry about that.
That's okay. That's fine. Yeah.
And I saw what you did on Twitter, and I saw the previous podcast on YouTube, and I say, oh yeah, let's do this.
It's
And I
awesome.
really love this concept that in crypto, everybody is accessible at the end of the day,
Yeah,
because we are here to build something together.
exactly. That's so great. So that like that early community, like I got in a little bit later than that. I got in at the end of 2017, just like you got in at the peak of 2013. I got in at the peak of 2017, so one cycle later than you. So I wasn't really around, right, for that early like communities that were being built. Like how did you go then from setting up ETH France to kind of getting an actual formal job in crypto? Like what was your thinking happening there?
So it was like my main area of interest. has always been and still is finance on the blockchain. So
Mm.
it was not called decentralized finance back then. There were no name for it, but it was really interesting to me at the point. And basically, I was at DevCon 2. DevCon 2 was organized in October 2016 in Shanghai. And I met, that was my first large conference, crypto conference and Ethereum conference in that sense. And back then, I met with a group of people that are now working in many parts of the ecosystem, and we decided to work together to do this stablecoin research. So it was like an opportunity, and that's something that is still exists even today, is that if you want to work in the ecosystem, obviously it's a bit harder than at the beginning because the competition was very low back then.
Yeah.
There were no one, so anybody that was motivated was like a possible candidate. But still, if you want to work in crypto right now, nobody cares about your degree. Nobody really cares about what you did before in Web2 or in TradFi. What people will care about is that, are you active in the Discord? Are you active in the governance forum? Are you active on social media? Are you producing content like a podcast that we are right now? And that will make you stand out and will create opportunity for you. That's everything. Everyone that is kind of famous in the ecosystem went through the same path, and I think there's still plenty of opportunities right now, no matter who you are. Even if you are like an anon with an anime picture on social media, nobody cares about that. Everybody cares about the quality of what you produce.
Absolutely.
And that's really interesting, and not something that exists in traditional finance or that much in Web2, where your degree matters more. And I have the feeling that obviously with maturity in 5 years, in 10 years, it will matter more where you come from, what you did in the past, and these kind of things. But we are still in this sweet spot where the only thing that matters is what you bring to the table. So it's a land of opportunity and an ecosystem of opportunity.
Absolutely, yeah. And for me, like personally, I got into the Rocket Pool community in 2021, and I was around for a while. I started staking on Rocket Pool in the beginning of 2022, and the community was so like busy and thriving that I felt like people couldn't keep up with everything that was happening. So I was like, you know what, I'm going to become like this newscaster for Rocket Pool, and that's what I'm going to do because I love the community so much. I'm part of the community every day. I didn't ask anyone for permission. I didn't talk to anyone about it in that way, like saying, how can I do this? Can I do this? I just started producing the content and the community loved it. And it's really small, right? Like my channel is really small, but it's very much just about Rocket Pool, like this really tiny protocol. It's such a niche, but every day, I have a few hundred people watching every day, and people are really interested in what I'm doing. And I didn't ask anyone, right? I just started doing this, and the community valued it. I got a grant from Rocket Pool, the community, to fund this. So now, this is like my job, basically, like in a sense, and I get some donations as well. And that's the thing, like if you put in the work and if you are passionate and if you're kind of semi-competent, people will respond really positively to that. So that's really, really cool. So okay, so now you're working for Consensus, you're doing research on stable coins. What were some of the things that came out of that research that you could see like the seeds of growing into like Maker or like USDC or any of that kind of stuff? Can you point to any of that research that you did?
Yeah, so it doesn't make sense to go into the technicalities, but basically what we did was working on the stability through derivative. So when you take a leverage position and on the market, so leverage long and leverage short, you can basically create stability out of those two positions if you have a third actor that is ready to pay for the stability. And basically that third actor pays the funding rate of the others. Because usually when you take a leverage position, directional, you have to borrow. So because you borrow some capital in order to increase the size of your position. And obviously, if you borrow, you have to pay interest. And it's the same thing on the other side, but sometimes you have an excess of capital on one side and a deficit of capital on the other side. So sometimes the funding is positive and sometimes the funding is negative. So basically, if you go to Binance or this kind of platform, sometimes you will get paid to open position and sometimes you will pay to have position open. And basically, when you introduce to this equation a third actor that is someone that basically doesn't want to care about the price fluctuation of the asset he uses as collateral, but just wants stability and is ready to pay for it. It's actually quite interesting in what you can create as a side effect. Obviously, it's oversimplified, but it was like the way we expressed the thing, and we were in contact with MakerDAO and Rune back then, because we were like basically developing at the same time and creating at the same time. And we were not a fan of Rune model, because over collateralized stablecoins was you have to realize that back then there were no Uniswap, no decentralization, no Aave, obviously, no. Well, MakerDAO was not live, and like on chain there were nothing. Like the only thing that existed on crypto was people trading on centralization. That was the only thing. So to us, it was like a bit complex to reach scalability with this kind of asset, because there were no real token with actual value. Obviously, it was the beginning of the ICO at the end of 2015. So the first few tokens was like emerging, but it was very hard to value them. And CDP model, so the MakerDAO model of over collateralization, is not very capital efficient compared to some derivative-based model. And because trading was the only use case of crypto, it was like more natural to go that path. We got like no need to give all the details of things, but MakerDAO released the product. We decided to move on another thing with the team. And it's quite interesting because Angle, which is doing like the AG Euro, so a euro-based stablecoin, is basically the same model that what we developed in 2015 and 16. So and also there's other stablecoins out there that use exactly the same model as ours. So it's always fun to see the research become like a real world use case. The name was variable, by the way. I did not say the name. So it was like one of the very first DeFi protocol, even if DeFi was not a thing back then.
Yeah, that's so exciting. It's amazing that, you were working on like really on the boundaries of crypto at the time, like the cutting edge. And then like when people were focused on doing ICOs and stuff, you were working on actual like research and then DeFi technology even before it was DeFi. How did like 2016 and 2017 go for you? Like, Ethereum, you got in 2015 and you see like ICO boom happening and the technology developing and the price, of course, going beyond anyone's wildest dreams, right? $1,500 by the beginning of 2018. How was that period for you?
It was like exhausting, to be honest, because it was like, to be honest, I prefer this bear market like 1,000 times compared to the bull market and the bear market we had, because in the sense that it was an ICO market. So basically, it was speculation on PDF. So people were presenting PDF and landing website. I was saying, we're gonna do like great stuff. This is the token sales smart contract. Send Ether there, and you will get our shitcoin. Yeah. And there were like very little things to do directly on chain. Like Uniswap appeared after. Like Uniswap appeared like maybe at the end of 2018, if I'm not wrong about that. Yeah. MakerDAO appeared in the early days of 2018, if I'm not wrong about that. So it was like not that much of a great period, because each time there's a bull market, there's always a ratio in every community about the signal, people that work and build, and the noise, like people that just do some noise and say, buy this shit to the moon, we all gonna make it, and then things like that. And the noise is okay when you have actual application and things to do and things to build. Yeah. And this first bull market of 2016-17 was not something, a situation where we had like that much application to play with. So it was not that much enjoyable to me. So obviously we had like more money than before. Yeah, wow. but that's not the main interest. So and I think like the big correction we got like minus 94% in 1 year on the price of it was like expected after all this excess. because we got like so many bad projects funded with so many hits. Like there's still project today that raise like maybe 100,000, 150,000, 200,000, 250,000 each for shitty project back then. And they still have like a lot of it because it's hard to sell a 250,000 it.
Of
And
course.
they will have money forever and pay themselves like 500,000 a year doing jack shit. I call them soft rug or slow rug.
Yeah.
And there's so many of them. Like if you look at the 2016, 17, 18 ICO and you check the list, all the ones that are not scammer and not in jail, very few ones are still building.
And that's Rocket Pool is one of them.
Yeah, and Aave is one of them as
Of
well.
course.
Aave did an ICO with Atlan, and I think we deliver a few products and people are not too unhappy with it. And Rocket Pool is an example. I'm not saying like everybody is like doing a slow rug, but a few ones, like quite a few ones.
Yeah, but like that kind of makes it more special, right? The projects that you see that are still around from then and still building and still working, that's really great to see that those are like solid projects, right? And like no one will ever say that Aave is not a solid project. So that's really cool. You said that you started working for a digital assets firm as an analyst. Like what was that job like? What were you doing then?
So it was like 2018, so still in the ICO era, and because so a crypto asset service provider is like an entity that allows like that is licensed to buy and sell crypto for their customer, and there's been like two services like the B2C services like retail, so people just buy and sell their product, and also a more private section for like high network individuals and investors. And I was working in that section, and basically we were like available resource for investors that were saying, okay, we want to invest in X. What do you think of X? Producing reports. It was not that uninteresting, to be honest. I was like quite an enjoyable job as an analyst, but it was not really on the building size. So it was not. At some point when I got the opportunity to join the Atlan team, I was like, okay, this is a good job. I was very well paid there, and very and less paid at Atlan because Atlan was like a $10 million market cap project at the time, so they did not have the budget to pay me as well as the analyst job. But I was like, okay, I accept to be paid less and be part of the builders.
Yeah. So the building was always like the thing that pulled you in, right? Like you were always wanting to build. So they say that, a bear market is just a build market by another name. And 2019 really is when things really got building. And we saw that happen in like the DeFi summer of 2020. What was that period like for you then when you were working in actually building? Like what kind of stuff were you building, and what other projects were happening at the time that really excited you?
Well, 2020 was like an incredible year, full of excess, but it was like really enjoyable compared to 2017 because full of excess of actual product. So, like to me, I will always prefer like a shitty Uniswap clone, like a sashimi swap or whatever, a food coin swap.
Yeah.
Because there's actual code, there's an actual application that you can actually use, and actual software. And the quality of that software is not always good because there's been so many hacks and exploit and rugs and things like that. But it will be always better in my eyes than selling just a PDF and then a shitcoin token. So like for the first time, like it was the first bull market where you actually can do things on chain. And it was very enjoyable. So on our side, we were building Aave. So we launched Aave V1 on January 2020. We created like the flash loan, which was like quite a breakthrough innovation back then, and quite a lot of stuff. It was a bit the war with Compound back then. So we were like Compound was like the main actor because they launched in 2019. So they were like much bigger than us, and we were the challenger. So it was like a good, healthy competition for the ecosystem because it brings innovation up and try to deliver the best product to the end user. And we did V2. We got the launch of Uniswap V1, then V2 on 2020, if I'm not wrong, or 2021. Then V3, we got Wi-Fi, which was quite a shit show, but quite fun as well. And yeah, 2020 was full of excess, but a good period of time.
Yeah, so like one of the things that like a narrative that emerged at that time was like this DeFi barbell. That on one side, you could have Bitcoin, on the other side, you could just have these app tokens, and there wasn't really much need of like the ETH token. Like were you aware of like this narrative that was kind of around at the time, and like what were your thoughts about like building on Ethereum at the time?
Well, the thing is that back then the tokenomics of Ethereum were not as interesting as now, because now we have EIP 1559. So basically, when there's a lot of activity on chain, there's a lot of it that is burned. Now we have staking and Rocket Pool. People that listening to us, they are very well of that. Is that the consensus of Ethereum is proof of stake? So when there's a lot of activity on chain, you actually get part of that activity revenue. Obviously, most of it is burned, but part of the priority fee goes to the staker. And the inflation on Ethereum was quite high. I think it was still 3 ETH per block, so 3 ETH every 15 seconds. Now we have a deflationary Ethereum, like minus 200,000 and ETH for the past 6 months or so.
Yeah.
So the Ethereum as an asset was not that great in 2020 compared to other assets that were more interesting in terms of tokenomics or in terms of experiment, in terms of narrative. And obviously, we got like the big breakthrough on the Ethereum side. So the burn, the staking, and now the liquid staking tokens, such as ETH. And it bring back like Ethereum at the center stage, like saying, okay, we are the technology, we are the token. And it's quite interesting to have the main asset because you basically have a share in the casino. So every activity, you will always win your fair share, no matter what happens. So I have the feeling that Ethereum as an asset still today is not as interesting because, like, for example, I don't have more than 1 ETH. I use that to pay gas because Ethereum as an Ethereum itself is like just to pay gas and pay transaction fee. But Rocket ETH, that's quite a good asset. That's an asset I want to accumulate and give to my children. And obviously, I'm more neutral than you guys. You are the Rocket Pool podcast, so I'm more neutral. So I also have like ST from Lido and other liquid staking tokens. I try to have a diverse exposure. I cannot be maxi with my investment, but Rocket Pool is one of the most interesting value proposition in the ecosystem. And yeah, it makes sense today to have liquid staking tokens.
Of course. So, working as a developer in 2020, you had a slightly different view, I guess, of the Ethereum gas fees, right? Like we've kind of hinted at 1559, but before 1559 came through, like I feel like every time there's any kind of activity on chain, people complain about gas, right? And that's a really good opportunity normally for alt layer ones to try to siphon away some users. They get like a shitty clone of the app. They say, hey, instead of doing that on Ethereum, you can come and do that on, chain XYZ. What were your thoughts about, that alt layer one narrative that was emerging at the time?
Well, it's always the same thing. Like VC are investors like the others, they have FOMO. So, and I think what we learned during this bear market with most VC fund going to jail or going bankrupt is that we learned that they are investors like every other ones, and most of the time not better than everybody else.
Absolutely, yeah.
And I have the feeling that like many people, like VC, they say, oh, we missed Ethereum, so what's the next Ethereum? And that's always the same thing. Oh, we missed Rocket Pool. What's the next Rocket Pool? Let's look at this liquid staking token. That's going to be the next Rocket Pool. And at Aave, we have the same thing. Oh, we missed Aave. What's the next Aave? And then they invest in some shitcoin, they get wrecked, and then they lose their money. That's part of life.
Yeah.
But it works. And there's always like this incentive for investor to, instead of going with something that works and something that can scale and something that has a technology that can evolve over time, to just invest money in shitty project because maybe they will 2 or 1000x in terms of return. That's part of the game. and often they're not. The market remind them that it was not a great idea, and that's it. It's if you are not a speculator but just an investor, you don't really care about that noise. Like what is important is that during the cycle of 2020, the EVM, so the Ethereum virtual machine, became the standard of decentralized application.
Absolutely.
And right now, if you are building on Ethereum, if you are building on Polygon POS, if you are building on Avalanche chain, if you are building on Arbitrum, on Optimism, on ZK, EVM, or whatever, you are building on Ethereum. In terms of technology, you are building on Ethereum. And that was not something that was set in stone in 2020. I don't know if in 10 years it will still be the case, because obviously with technology things evolve. But no, in 2023, we know that Ethereum is a standard. There's always like a few exceptions, like Tezos for a few guys, or Solana for a few other guys, or this kind of stuff. But 99% of the on-chain activity actually happens on Ethereum technology. And I think that's a big breakthrough, and we cannot go back. So right now, if you are trying to launch in 2023 a layer one that doesn't adopt the Ethereum technology, you're basically dead on arrival. Yeah, you will not survive this unless you create a technology that is so groundbreaking that you are the next paradigm. But to do that is very hard. So good luck to do that. And so I declared that on Twitter like a few months ago. I think the layer one wars is over. It's not going to change unless there's a technical breakthrough. And now we are in the layer 2 wars era, which is quite interesting. So Arbitrum will compete with ZKVM, ZKVM will compete with Darknet, and so on and so forth. But at the end of the day, when you are staking Rocket Pool ETH, you have your mini pool, you will get your fair share of everybody, because at the end of the day, Arbitrum, they anchor on layer 1. ZKVM, they anchor on layer 1. And all the other guys, they anchor on layer 1. So they pay their fee to the layer 1. And as a staker, you get your fair share.
Absolutely, yeah, and that's why we're here, right? Like we think of Rocket Pool as like Ethereum infrastructure. Like, you know, we're not going to build cities, but we're building the roads to like cities, like to get from one city to another. And you pay the toll on the road, and we're going to take that toll, right? So that is why, you know, it's kind of boring in a sense, because it's just such a simple like protocol, but it's so incredibly valuable at the same time. Like, you know, just like roads are boring, it's not the same as a roller coaster. A roller coaster is so exciting, right? But you can't get to a roller coaster without having roads. So Rocket Pool is mostly like quite happy with our little corner of like infrastructure, and it's going really well for us. But I really want to talk a little bit about this layer 2 stuff that you mentioned, right? Like, I'm of course, you know, believe in the layer 2 roadmap. I think it's amazing. You know, I've transacted on Optimism and Arbitrum on ZK Sync era, like going, like, it's just such a great experience to work on those chains. With your work, you've been pushing some of that stuff onto layer 2s as well. Like, how has that been received by the Aave community, and like, what's your motivation for going to layer 2 now?
Well, to me, like, it's really important that DeFi should be for everyone.
Yeah.
I'm not building like the decentralized finance for the rich, because I consider that traditional finance is finance for the rich already. So if decentralized finance is only limited to the rich that can afford $50 to pay a transaction fee, what's the added value of decentralized finance?
Yeah.
To me, I will still work, and I will continue to work in this ecosystem until someone with $10 can use DeFi and every services on DeFi without having like any issue with to do that. Obviously, if you have $10 right now on Ethereum, it doesn't make sense to use Ethereum at all. If you have $10 right now on Arbitrum, it doesn't really make sense to use Arbitrum, because you will pay probably 50 cents or $1.50 to do a transaction. If you have $10 on Ethereum POS, you will probably get by, because you will pay probably 5 or 6 cents, but still that's a lot in terms of percentage of your capital.
Yeah.
So we still have a lot of work, but obviously right now you need to have at least $50,000 to use Ethereum. To me, that's for sure. Otherwise, it's not interesting. You need to have at least $10,000 to use layer 2, or maybe $5,000 to use layer 2. And I will continue to work until people with $10 are happy to use on-chain, decentralized, permissionless product. So still a lot of work I think it will take us at least another cycle to get there in terms of scalability. So there's technical breakthrough that are coming on Ethereum, like EIP 4844. That will increase by 100x, not really, but that's what people say. The scalability of layer 2. There's a lot of gas optimization and architecture optimization that we can do as well. There's a lot of account abstraction. So this idea that not everybody should manage everything themselves. So you can build a better user experience that is more adapted to mass adoption. So there's still a lot of work if you want to build. We are still at the beginning of the blockchain journey, and I think the next decade will be quite interesting.
I think the thing that I really like about like the layer 2 roadmap is that there's also layer 3s, right? And there's like validiums, and there's all these different forms of like, where you send your data and like, your processing and compute and stuff. So right now, like you said, Ethereum is priced out for a lot of people because a Uniswap transaction right now, I think, can cost like $40, $50, $100. And that is not worth it unless you're transacting with large amounts, like you said. But then as you move up to layer 2, like Arbitrum 1, then you pay 10 times less, basically, right? Like right now, as a rough amount. But then if you go to Arbitrum Nova, then you're paying 10 times less than that as well, even more less than that. Like there's even moments where you can get sub-cent transactions. So that technology does exist now, but then there's a scale, right? Like of security that you're getting for that. And of course, Ethereum base layer is the most secure of all of them. There's fewest trust assumptions there. With the layer 2s, they all have some level of trust assumptions built into them with their sequencers, etc. And then as you go to like the apps that are building on the OP stack or Arbitrum Nova, those kind of things, then that has the most trust assumptions and the most risks involved for users. So there are places where people can go now, but like I totally agree with you that the optimizations and the developments are going to be coming in the next year, 2 years, 4 years, 5 years into the next cycle. That I think would put us in a really good position. And of course, there's also going to be like base layer optimizations that people are saying, like ZK-fying the mainnet, etc. Like that is really exciting stuff that is on the roadmap as well. So Ethereum, I think I totally agree with you that we need to make it for everyone. There is a way that crypto can be for everyone right now on the version of Ethereum, but I think we've still got a long ways to go, like you. So I'm excited to be here for that, right? And it's really cool that Arbitrum is like pushing onto these layer 2s and making the same products available on layer 2s that we have on layer 1, because you want it to be inclusive for everyone. Like we want people in India who have a cell phone to be able to, not just India, anywhere, in parts of the world that's still developing, etc., like to be able to transact with $1 or $2 or $5, go and buy our ETH and have that the returns coming in and not be at the point where they're losing so much that it's not worth it for them to do it. So I really like that. I really like that. I've seen like some of your tweets with that message, and that really resonates with me strongly. So I'm glad that we mentioned that. So
and DeFi is already like orders of magnitude more accessible in 2023 than in 2020. When we launched Aave V1, like depositing on Aave V1 was like 80,000 units of gas, which will probably be at the current gas price $250 to be honest. So completely inaccessible. Now it's much cheaper to use Aave even on mainnet. And also, we were the first one to actually go multi-chain and multi-network. So in April 2021, we deployed on Polygon and then Avalanche. We were the first one to do that, the first one to actually, because it was important to become accessible. And those networks are not the most profitable for us, like far from it. Like most of the Aave revenue is on Ethereum mainnet because that's where the whale are, to be blunt about it. So the whale create the most volume, and because they create the volume, they create the revenue. But where the user are, the majority of the user, they are on layer 2 right now. So it depends of your philosophy as a builder. Do you want to solely build for the bottom line? So how much money do you make? Or do you want to build Obviously, you want to make money, otherwise it's very hard to exist if you, as a project, if you don't generate any income. So obviously, that's a very important thing. But also build to make your product accessible to as many people, even if that's not the most profitable part of what you do. And to us, it's really important to keep it that philosophy.
So tell me about your transition from Aave Co to Aave Chan. Like, what was the thought process behind that? Like, what were you thinking about, like, your work and what you could do in order to do that?
Well, the first thing is that I was the integration and developer relation lead, but Aave is integrated everywhere. Like, do you know any project in DeFi that doesn't integrate Aave? So at the end of the day, well, my job is here done. I did the integration everywhere in the ecosystem. Joke aside, I think it's important when you are building a decentralized protocol to actually decentralize. And because Aave is a successful protocol, it's a protocol that has user, that has revenue, that has liquidity. The protocol itself has good enough revenue to start picking the bill itself, compared to having a company that develop the protocol completely. And basically, this approach started last year. With a part of the core developer of the Aave company that become decentralized and directly service provider to the DAO. So the core development team of the Aave company became BGD Labs, which is now the core developer and service provider to the DAO. Then the DAO employed a risk service provider with Chaos and Gauntlet. Chaos Lab and Gauntlet, because it's really important for our liquidity protocol to assess risks on assets. Otherwise, you end up with mention on reg.news website, and that's not something that we want. Then we started to develop with the DAO directly to pay the grant program and other service provider. And when all of that was starting to be mature, I decided to switch side and leave the company to work directly for the DAO, because to me, it makes sense that the DAO has to take the lead at some point in a decentralized protocol and permissionless protocol.
Wonderful. So as you were making that transition and, like, starting to work for Aave Chan instead, the stuff on the Rocket Pool side was that, we were growing really well. Like, post merge, we got a nice period of growth. We got like some good listings on exchanges that happened organically that really drove the volume of RPL token as well, and then interest in the RETH token. So as that period of growth was happening, one of the things that happened, a few months ago, was that we got a Chainlink Oracle, which is so important for DeFi integrations. For people who don't know why a Chainlink Oracle is important, can you just tell us what the importance of that is?
So Chainlink is the standard in terms of price feed in the ecosystem. They are basically the most reliable and the highest quality data provider to price asset on the blockchain, because a blockchain is not aware of the value of this asset. So blockchain know exactly how much asset any address has in the world, and is the best technology to have like a decentralized ledger that is immutable, that you cannot double spend money on it. So that's the best technology on it. But it's the worst technology in the world to know actually what's happened in the real world and know what's the price of an asset, know what's this kind of stuff. So you actually need operators that take that real world or at least like outside of the blockchain data and inject that data into the blockchain. So smart contracts are aware of what is the value of what is the value of one DAI, and this kind of stuff. And when you have a liquidity protocol such as Aave, it's absolutely critical, because if you are not aware of what's the value of one RPL, for example, or you can make sure that people that use RPL as collateral are sufficiently collateralized, and the position is healthy enough to make sure that people that provide liquidity in what they borrowed are not at the risk to create bad debt and lose money in the ecosystem. So Oracle are the most important piece of infrastructure in DeFi. Failure of an Oracle can lead to catastrophic failures and loss of user funds. It happened a few times in the past with other actors than Chainlink. that's why we work with Chainlink, because they are the best in the world to do this. And it's really important for an asset to have a Chainlink price feed, because in itself, the simple fact that Chainlinks accept to provide a price feed for your asset is a sign of good quality of the asset. That means it's liquid enough for the Chainlink standard, which is the highest in the ecosystem, and deemed qualitative enough for Chainlink to be part of their ecosystem, which is like a good seal of quality, I think.
Yeah. So that was, I think, one of the key stepping stones for Rocket Pool to have this like flourishing DeFi integrations that have happened over the last few months. The way I learned about you was from you making a proposal for Aave to integrate our ETH into Aave. So this was, I think, 3 or 4 months ago. You first, came to the Rocket Pool community. Some of the people in the community helped you put that proposal together. Can you tell me what you were thinking about? Like, why did you want to integrate our ETH? What were your thoughts behind that? And how did that process go in the beginning?
So to me, it's really important to have diversity, because without diversity, it's very hard to be decentralized. And I have absolutely no problem with Lido. I've worked with Lido since quite a lot of time, and they are like delightful to work with. And we integrate STE, and it's the largest liquid staking token we have on Aave. So I cannot answer, even if it's the Rocket Pool podcast, I cannot answer as a maximalist. Obviously,
That's
I'm here
fine.
for diversity.
Yeah.
But it's also one of the main reasons why I push or eat into the Aave ecosystem, and I create this proposal, and I continue right now to push Rocket Pool ETH, is because Lido weight on the liquid staking tokens market was too heavy to my test. And I wish Lido the best, and I think they will continue to grow, but I want their growth in terms of percentage of the total market share to be reduced to an amount that is more comfortable. I don't think, and that's a personal opinion, that any liquid staking token provider should exceed 20% of the total of Ether stake, and 20% is already a lot of money. So I think people earn a lot of revenue with the fee on that. So people should be happy with 20% maximum. So that's why I'm pushing alternatives. So I did that with CBETH, because there's a lot of demand in the centralized world from institution, for example.
Yeah.
But I'm very attached to decentralized solution, and Rocket Pool ETH is the most decentralized liquid staking token we have in the ecosystem at scale right now. So to me, it was important, and still is important, to push Rocket Pool ETH into the ecosystem. So I did the proposal to list Rocket Pool ETH. It worked. The community accepted, so now it's directly an asset. It was successful, so I increased the supply cap on it. We got Shanghai, so now I want to push more or ETH. So the first thing is integrate our ETH into emote to allow like leverage strategy on our ETH, so it will boost I think tremendously the adoption of our ETH in Aave and our ETH in general, because with emote, and I think we will talk about that at some point, you have the ability to increase your staking yield by quite a factor on this. And also I want to integrate the Rocket Pool asset, RPL, because there's a lot of people that would want to integrate and deploy mini pool, but might not want, might be just interested to be long on it. And because they are staker of it, they want to have it and they want to be exposed in it. And some of them might not be interested to have an exposure in the RPL token, which is acceptable. I mean, not everybody is here to invest in every asset, and I think it's something that should be respected. And the fact that you have RPL on Aave allows people that has some RPL asset because they are investor, because they believe in the vision of Rocket Pool, but maybe they don't have the capabilities, technicals, or they don't have the capabilities like physically, like internet is bad where they are. They don't have like good connection. They don't have like the technical capability to deploy their own mini pools, but they have RPL because they believe in the future of Rocket Pool. So they have this asset, and if you are not creating mini pools yourself, you don't use the asset directly. So a good way for them to get some yield on this RPL will be to provide that in Aave. And the people that don't want to be exposed to RPL, so the other side of the equation, but want to stake with Rocket Pool, will have the ability to use Rocket Pool ETH or ETH as collateral to borrow some RPL, to deploy some mini pool, and basically have a data neutral exposure in staking using the Rocket Pool technology. So it's basically a win-win situation that we are trying to build together. So people that have RPL but don't want to stake will have the ability to provide RPL into Aave. People that have ETH and want to stake but don't want RPL will have the ability to borrow that RPL into Aave directly and deploy mini pool and participate in the ecosystem. So basically, everybody find with Aave what is missing for them in the equation. So it's a win-win situation for everyone.
And this is what I've been so excited about, Marc. Like, I can't tell you just how excited I am about this Aave integration, the deepening Aave integrations, and why I've been mentioning you on my show like every week for the last few months. Like, so many shout outs to the work that you're doing. And like, it's amazing, right? Like, I'm really, really happy that's happening. Let's take a quick minute to talk about how RETH is integrated into Aave now and what you can do on Aave with RETH before we then talk about like eMode and like go into that a little bit deeper. So just a quick like a minute or two to say what you can do with RETH on Aave now.
So right now you can, if you have RETH, you can take your ETH and deposit that into Aave v3.
Yeah.
And basically, the protocol will allow you in collateralization of, I'm checking the number right now to make sure I don't say bad things on a recording, of 67% LTV. So basically, if you deposit one RETH, obviously there's an exchange rate. So let's say, to simplify the thing, that one RETH is worth one ETH, you will be able to borrow up to 0.67 ETH using that as collateral, which is quite interesting because if you borrow 0.74 ETH, you can use that to buy our ETH and deposit that into Aave. And obviously you will end up with more collateral. And so you will have a debt of 0.74, but you will have 1.74 or ETH. Obviously we simplify the exchange rate right now. It's not the real figure. And obviously you need over collateralization. It's like simplification for everybody here. And then you have more collateral, so you can borrow more, so you can buy more RETH. And basically what happens each time you do that is that if the price, the cost of borrowing ETH is inferior of the return and the yield of our yield, you basically earning the difference each time you loop that. That's a leverage loop. So with 0.74 LTV, you will be able to do with like some kind of if you don't do degen parameters, you will be able to basically increase by 30 or 50% your staking yield, which is not too bad.
Very nice,
it's quite interesting. But what is interesting is why people mostly use STETH or CBETH to do that today on Aave is because those assets are within the efficiency mode of Aave. And what efficiency mode is that in terms of risk for a protocol, if what you deposit, what you use as collateral, and what you borrow is basically the same asset. So if you deposit RETH and ETH, the USD value of RETH and ETH are immensely correlated together. Because RETH is a wrapper around ETH that has been staked. So it's basically ETH plus the staking yield on that top of that. So the USD value of that position is not that important. Because if the value of ETH decline, the value of your debt decline, and the value of your collateral decline. If the value of ETH increase, the value of our ETH will increase almost. Obviously, there's always a slight difference in the secondary market, but almost at the same speed up and down. So you basically have a situation that where USD value of those assets is completely irrelevant for the health of your position as a depositor and a borrower. That's why the protocol in this kind of case, highly correlated asset, will change the risk parameters, and instead of having 67% LTV, you will have 90% LTV. Because the protocol will consider that your risk profile is completely different than someone that has ETH and borrow some DAI. Because if you borrow some DAI with ETH, basically, if the price of ETH goes down, the price of our ETH will go down, and the value of ETH in dollars will have an effect on your position, and
You
it
can
will
liquidate
get
it. Yeah.
liquidated. So the risk profile is different. So with E-mode and 90% LTV, it's not a times 50% you can increase, but it's actually a time 10. Because the leverage loops you can do is that every ETH, let's say the exchange rate is 1-to-1, not true, but simplify it.
Yep.
Every ETH, you don't borrow 74 cents, but you borrow 90 cents. So each time you can loop much more capital. It's more efficient in terms of capital usage. So that's why it's called efficiency mode. And it's quite interesting in terms of effect on that. And that's the proposal I did like I think 2 days ago or something like that, to activate E-mode for our ETH. And I think it will increase tremendously the adoption of our ETH into Aave, because right now I don't know what's the revenue on our ETH. I think it's 5 or 6%.
Yeah.
But if we activate E-mode right now, obviously we cannot do that if we are decentralized. People have to vote for it, and I have to work the code, so it's not something we can do magically. But if magically we do just this and click on a button on the podcast, the revenue you can have with a leverage position is 18%. So it's much more than what you are getting right now.
So did you say 18% or 80%?
18, 1 and 8, not 80. 80, I will put all my money at it.
No, so it's basically 3 times better returns. Which is incredible.
Yeah, and because I'm working to increase the efficiency mode to 95%, it's actually a 20x that you can do theoretically in math. So you can reach 32% yield on this asset. Obviously, because there will be more demand on it, the cost of borrowing it will go up. So I think things will stabilize around 14 to 15%, which is already quite good.
Amazing.
Obviously, we are not here to do financial advice. Every leverage position is a directional position. So if there's some issue with the value on secondary market of our ETH, if there's like some premium or some or the opposite, like some discount or ETH compared to ETH, your position can be liquidated. If you take higher leverage, you need less price fluctuation to get to a liquidation. Do your own research, be a responsible investor, obviously.
Thank you so much for saying that. And I was about to say that as well. And I was going to use the example of the STETH DPEG last year, which saw a whole lot of people get liquidated, who had the very degen positions. And the DPEG went down like about 10% from where it was supposed to be against ETH, which is a very big hit to Lido last year. And it really slowed down their growth a lot over that period, right? Like it was a very bad situation. Thankfully, you said that you were waiting until Shanghai happened for this to go through. Why was it important to wait for Shanghai for this to happen?
So basically, what is really important for liquidity protocol is the stability of the peg for liquid staking token and also for stablecoins. And basically, until Shanghai, staking was a one-way street, and everybody that listened to us and start staking before Shanghai know exactly what I'm talking about. Withdrawal were not possible on Ethereum. So it's quite complex to allow liquid staking token because you are completely relying on secondary market. So basically, your token is as liquid as Curve. And since Shanghai, your token is as liquid as whatever amount of ETH you have in the staking contract. You can have like 1,800 slot per day times 32 ETH, so quite an amount of liquidity that can go both way every single day without any limit and without any reliance on liquidity provider or this kind of thing. So the risk profile of liquid staking token since Shanghai completely changed. And one thing that we realized, and I think everybody realized, but it was very hard to understand to some people on crypto Twitter, I guess, is that nobody cares about unstaking it. Like people want to stake it, and the number of stakers of it actually increased compared to before Shanghai. And when we are looking at the withdrawal queue on Ethereum right now, it's basically zero.
Yep.
Zero. Sometime one guy
Yeah.
decide to go out. Why not?
Yeah.
But so it's quite interesting because if there's a premium on Rocket Pool ETH or a discount of Rocket Pool ETH, it's quite easy now since we have Shanghai to arbitrage that. And because we arbitrage that, the peg is more resilient. And when we look at Rocket Pool ETH, there were like for the longest time, like 4 or 5% premium on the asset compared to the fair price primary value. Now the premium is gone. Everything is much more stable. So the risk profile of Rocket Pool ETH and other LST completely changed. So that allow us on the other side of things to have more lenient, we are still a conservative platform, obviously, but more lenient risk parameter than before Shanghai.
And that is incredibly exciting. And if you look at the chart as well, like of the RETH over the since mainnet launch to Shanghai, you could see that there were periods where there was a discount. You could see there was a big period, there was a big premium for RETH up to 3% at one point, like nearly 4%. Now that is gone, we're at peg, and the peg is a lot more easily defendable. So the idea of there being these big fluctuations away from peg means that it's a lot less likely to happen now, thankfully, which then means that E-mode and of course this, don't do this, like it's very degenerate, but if you were to take a max degen position on Aave and on E-mode, then you're still relatively safer than you were before Shanghai, basically, because you're not now at the whims of the secondary market, you're now at the whims of the withdrawal queue, basically, and how quickly you can arbitrage that discount or premium away to get back to the peg where it's supposed to be, where E-mode is most efficient, basically.
Yeah, with a 95% E-mode. So that, right now it's 90, but we are discussing, and I'm in favor of increasing it to 95 because I was surprised, to be honest. I was betting on a withdrawal queue that will take more time to clear up over time, and also like a bit more of a mess. But basically, we got Shanghai. 2 weeks of like shatter everywhere, a bit of instability, and now back to business, and everything is super stable, working well, which is like quite an engineering feat, to be honest. I don't think the Ethereum engineers are like thanks enough for their high quality work, because since the merge, they basically did like incredible job on top of incredible job every single time, and people like forgetting to be thankful sometimes to the Ethereum Foundation on the quality of their work, but that's part of the life. So if you have 95% LTV, that's obviously don't do that. But on paper, you can do 20x leverage on your position. So if you have 10 air each, you can have like a 200 air each position. Do not do that, friends. Do not do that.
Yeah, at that point, your even a very, very slight deviation can cause a liquidation cascade through your 200 RETH, and it'll become zero, basically.
Yeah, exactly. So not zero, because liquidation on Aave will basically liquidate you in batch. So you will not lose everything. You cannot lose all your money with Aave position, but you can lose money. So be responsible, do your own research, and define your own risk profile, and act accordingly. It's fine to not have the maximum yield possible on theory, on paper, because all revenue, all yield comes with a risk, and everybody telling you can make money without taking risk is trying to scam you, and there's no exception to that rule.
Of course. And even with, staking, there's risks as well. With Rocket Pool, you get outside staking returns, like you get commission on top of your stake that you don't get on Ethereum mainnet. But then the risk is smart contract risk that comes into that, like if there's any issues with that. So there's risk at any point, you're getting some kind of reward. And that it's really, really important to keep that in mind, as tempting as it might be to turn your 10 RETH into 200 RETH. Marc, if you don't mind, can you tell me a little bit about the timeline of, like, from you submitting the proposal to E-mode for RETH being activated? Like what's the process that happens, and how long does that normally take if everything is successful?
Next week.
So how has the Aave community responded to RETH being used in E-mode?
Complete support. So the tourist team, which is Chaos Lab and Gauntlet, voiced their support on the forum. So there's basically zero bottleneck. And I think that I created that. Let me check. as Aave request for comment, so which is like the quick governance process. And let me check. Everything is on governance.aave.com if you want to check on that. So no, this one is to add our ETH on Arbitrum, because we're gonna push our ETH also on layer 2, because our ETH on Ethereum is great, but it's for people that has $50,000 of our ETH, and I think it's really important to give access to Rocket Pool to people even with $50 or even with $10. So obviously, I'm pushing for our ETH outside of Ethereum.
Wonderful.
But let me find the stuff. Sorry about this.
That's okay.
Doing so many proposals, sometimes I get lost.
So in the meantime, like while you're finding that, I can just let our listeners know that, you know, right now we have more people waiting to stake with Rocket Pool than we have people willing to mint our ETH. We have a queue of around 80,000 ETH waiting to be minted, basically to be matched with people staking. Of course, that's, you know, the negative of decentralized permissionless staking, right? Like we can't just accept the ETH in the black hole. It has to be matched with you know, ETH coming into people minting our ETH and ETH coming in as people wanting to be the stakers. So I keep telling, you know, my listeners that if E mode goes well and if it's all activated properly and that people start using it very quickly, which I think it will, I think that 80,000 ETH could pretty much be gone in a matter of days, because you only need to bring potentially, you know, like 30, 40, 50,000 ETH to eat up that 80,000 ETH if people want to do it relatively safely. So you can, if you've got the information up now about the process for getting E mode activated.
Yeah, so basically it's ARFC, so Aave request for comment, and it was posted 2 days ago, and I confirmed that both Resteam, Chaos Lab, and Gauntlet answered 3 hours ago. Chaos Lab answered 2 days ago. They are in favor of it. So basically in 3 days, I will post a snapshot vote that will start 24 hours later. So that's in 4 days. That will last for 3 days. So that's 5, 6, 7, 7 days. Then I will write the code to do that during the weekend, this weekend, so it will be ready directly. And if the snapshot vote is yes, I will publish that directly as a AAP on the governance contract. So that's 24 hours plus 3 days. So 7, 10, 11 days.
11 days.
11 days. So when is 11 days? Let's say when we
May
record the
22nd.
podcast.
May
22nd.
Yeah.
So it's a Sunday. So let's say Monday 22. So that's my objective, launching E-mode May 22, and we are recorded. So if I have not done that in May 22,
I will
you
send
can
all my listeners to bother you on Twitter.
you all go on Twitter, and each time I post something, you say when E-mode.
Yeah, wait, I'm already doing that. So I've been telling my listeners that.
But guys, we are decentralized. So if the community say no, there's nothing I can do with this.
Absolutely. Yeah, that goes without saying. But I've been telling all my listeners that it might take 4 to 6 weeks. So I am really happy right now, Marc, about 11 days. That's incredible. Of course, you know, we just got the Lido version 2 proposal to allow withdrawals. That should be coming next week as well. So all of these things together, I think, are looking really good for Rocket Pool in the next month or so. Let's spend a couple of minutes talking about why you want people to use their RETH to borrow ETH and RPL. Like, how is that going to work? You kind of talked about it a little bit before, about kind of being like people who are neutral on the RPL token. What kind of people do you think will be using this service that you're going to be offering soon?
So basically, there's 2 things. So the first thing is that if you want to be only exposed to staking yield, the best thing you can do right now, let's say E-mode is activated and we are in a few weeks. The best thing you can do right now is take your ETH, deposit that in the pool to have a slippage free or ETH, use that as collateral, activate E-mode, borrow some ETH, deposit that in the pool, so slippage free or ETH, and so on and so forth, and you do your leverage. Obviously, there's going to be smart contracts that allow you to do that like in one click, like for example, in StatApp. They would probably integrate Rocket Pool ETH. I would work with them to do that, and DeFi Saver as well. So that's one way to do things, but that's, let's say, a speculative play, because you are basically taking a leverage position to be long on it, because obviously you are betting on the pricing appreciation of it in the future, be long on staking yield in the future, so and also be long on Rocket Pool in general ecosystem. But if you do that, you are not exposed at all in Rocket Pool token, because you don't need RPL to build this kind of position, and that's completely fine. Some people are not interested in RPL. So that's one strategy. A second strategy is you want to basically deploy mini pool because you want the premium on the staking yield, because you will have, like, since Atlas, like 8 pool, and I think I saw like four pool in the
Hopefully,
roadmap.
but not yet. Well, there's some
Yeah.
protocol updates we need to happen, like
Yeah,
forced exits, etc.
yeah, but I saw AIP discussion. Obviously, it's not implemented, but discussion about that. So it's quite interesting. But in the future, so 8 ETH, and you basically will host in your mini pool like the 24 remaining ETH, and you will get RPL plus ETH yield plus the fee on the ETH you are hosting. The best, and you don't want leverage. So basically you have 8 ETH, you have 16 ETH, you have 24, you have like 32, 64, or many as you want, but you don't want leverage. That's not your thing, and you want to operate a node. But also you don't want exposition to RPL, which is something that can be acceptable as well. The best thing you can do right now is basically you take your ETH, and instead of deploying the pool immediately, you deposit that in the staking pool, liquidity pool. You get our ETH without leverage because there's no premium right now. You use the our ETH as collateral into Aave, and you borrow ETH plus RPL to basically deploy your pool. And basically, if you do that, you don't have to buy any RPL, but you have RPL debt. But when you deploy your mini pool, you get RPL yield. So basically, that RPL yield can be used to pay back your debt. And obviously it's expected that the cost of borrowing RPL on Aave will be lower than the revenue of RPL when you deploy a mini pool. You basically paid to have an exposure in RPL. And if you believe in the future of RPL, that's a way for you to start an exposition in RPL without actually investing capital to do that.
That's amazing.
And you borrow it, and your ETH, you produce a staking yield in ETH through your own attestation reward and block reward, and through the commission you take with the other stakers that goes within your mini pools. So that ETH can be used to repay your position over time. So you basically have a self-repaying loan that you are paid to have, because your staking yield and your RPL yield is most likely higher than the cost you have on Aave to do that. Obviously, the capital efficiency is not 100%. Obviously, some people will want more exposure and less exposure, but I think it's a interesting pathway for people that might be interested to explore that way of doing things with RPL. That's maybe a way to increase Rocket Pool adoption from people that might not be interested at the time, and that's something that is acceptable to have an exposure to the RPL asset.
Well, just in the Rocket Pool community, we are well aware of there being people already in the community who don't want exposure to RPL. So, we the community set up this thing called a whale marriage, where there's a contract where people can submit their ETH and people can submit their RETH and then, their RPL, and then that's staked. So one party brings the ETH, the other party brings the RPL, because the person with the ETH doesn't want any RPL exposure, right? So this is already happening. One of our biggest node operators is Marco Barco and Patricio Warthalter. They are in a marriage together, and they have 1,500 validators set up, where Patricio brings the ETH, Marco brings the ETH, Patricio brings the RPL, and they keep their rewards separate. So that is, we're already aware of those people in the community. Our biggest node operators are those people in the community. So hopefully this will open up the doors for many, many more people to stake with Rocket Pool who don't want exposure to RPL.
Well, the difference with using Aave is that Now you will have a solution that is permissionless,
Mm-hmm.
accessible to everybody, not just to whale that have like some OTC deal,
Exactly.
with the rule that are the same. If you have 1 million ETH or if you have 10 ETH, it's going to
Mm-hmm.
be exactly the same rule and exactly the same cost. And even if you have 10 RPL, you can deposit that in Aave and you will get the same yield that Patricio that has like a few $1 million of the Pope guy has like a few $1 million of RPL. I think it's pretty well known at this point.
Yeah, that's Patricio. Yeah, Poap, yeah,
Yeah,
that's
yeah.
Patricio. Yeah,
And so it's just another tool. Obviously, we did not invent the OTC market, but
yeah,
at least we have a decentralized application that will allow to do that, no matter what's the scale. If you have 10 RPL or 1 million RPL, you will be welcome to use this. And obviously, the third kind of actor is people that has RPL, and I talked about that earlier, but don't want to operate mini pool themselves for any reason, but they want to invest in RPL, so they want exposure in RPL, and they can bring liquidity into Aave. And people that will borrow RPL, they will pay interest rate, and those interest rate will bring a RPL yield. So obviously that yield will be lower than if you operate Rocket Pool yourself, obviously, but it's part of the game because you
yeah.
don't do the work, so you still have part of your yield.
Yeah, and when you tweeted about this, Marceau, who is a big RPL whale, who you've talked to a bunch of times, I know, he said that he'd personally seeded the RPL pool with a decent chunk of RPL to enable this to happen, and then he explains about the pros and cons of that. But that's really exciting. You mentioned there a couple of times, Marc, that you can go from people with 10 ETH or a million ETH. What kind of limits will there be on our ETH E mode once that's activated? Like, will you have a rising cap, or how will that work?
So right now the cap is 20,000 or ETH, if I'm not wrong about this. We started with 10,000 and we increased the cap to 20,000.
Yeah.
So right now there's 13,000, so around $25 million deposited in Aave. I'm in favor. So first we're gonna activate me mode, and I think in less than a day we will reach the 20,000 cap.
Yeah.
And secondly, we will increase the cap, and I'm in favor to increase to 40,000. So that's gonna be one of my proposal next week.
Amazing.
And when we reach that, we will increase again and again and again. It's okay. We have time. We will increase. And the thing is that we always monitor secondary liquidity, and the state of the withdrawal and deposit queue. So
Yeah.
sometimes we reach max cap on the supply and borrow cap, and people are not happy on social media and say, "Hey, I want to use Aave, please let me in."
Yeah.
But people have to realize it's a lot of money, and we have the real intention to keep everybody safe. So sometimes we reach the maximum size of what is safe with the ecosystem. So we have to wait for more adoption, more volume, more liquidity on secondary market, all this kind of stuff. The general market condition to improve, to basically open the gate a bit more. So sometimes it's frustrating when we reach my cap, but that's part of the game. And we try to make sure that everybody is safe. So we increase, obviously, but step by step.
That's wonderful to hear. Yeah. Marc, I'm so excited about this, and I tell my listeners, like I said, all the time, just about how exciting this is. A whole lot of people had questions about how this stuff will work. So I think you've done a really great job of answering those questions. So thank you so much for that. Tell me a little bit more about like some other things that you are thinking of doing with Rocket Pool. Like, is there anything that you can share with our listeners that like nobody else really knows yet? Like, I'm asking for some alpha here. If you have any read for us all.
Yeah, sure. I don't remember what I told you before we stopped recording. So what I can share. Do you remember?
Yeah, you were talking about a proposal that you were right about treasury funds, maybe about.
Oh yeah. And so basically, Aave has a lot of ETH. So each time someone borrows ETH on Aave, the protocol takes what we call the reserve factor. So a part of the interest paid by the borrowers go back to the protocol, and that's all. Basically, the protocol is sustainable and create an economy. And basically, Aave is earning between 50 and 75 ETH per week at the current rate. and it's actually growing because there's so much demand with liquid staking tokens and other assets. Even if it's the bear market and the revenue is quite low compared to 2021, it's still a good amount of revenue.
Yep.
And we have like 1,500 ETH right now in the DAO treasury. So that's a decent amount of money. And it doesn't make sense. So every asset on the Aave treasury, we believe in our own product as a DAO. So every asset in our treasury is deposited into Aave. So is earning the Aave yield. So right now on ETH, the DAO is making around 2%. But it doesn't make sense. We believe in it. We are an Ethereum application, and we believe in staking. So it's very hard for a DAO that is decentralized and is not a specific entity and not in the physical world to actually stake themselves. But thanks to liquid staking token, we can have an exposure to staking. So I will make the proposal probably today or tomorrow. It's already late today, so probably tomorrow. To mobilize the ETH we have in the DAO into a liquid staking token. And Rocket Pool is one of the most interesting liquid staking token out there because it's the most decentralized. I think I said that already in the podcast. So it aligns very well with our value at Aave. And also thanks to the deposit pool. I don't know the official name for it. You know the pool, the Arbot is arbitraging. What's the official name of it?
The deposit pool, like you.
Deposit pool.
Yeah,
That's
deposit pool. Yeah.
No specific. But thanks to the deposit pool that doesn't have a premium and is not full at the moment, it's very easy without any slippage to convert WETH into or ETH for the DAO and then deposit that back as liquidity into Aave. To allow more liquidity and more volume for Aave. So that's something that I will push. Obviously, I cannot be maximalist, dear friends. So I know it's the Rocket Pool, but I will also propose that part of that ETH is converted into ST ETH because it's the most liquid. But I'm not in favor, for example, we have CB ETH on Aave, but CB ETH is centralized in nature. It's part of Coinbase. Coinbase is doing great work, and I love working with them. But the CB ETH asset do not align with the value of decentralization. So it is in fact centralized. So that's not going to be part of the proposition. So the proposition will be to, as the Aave DAO, be part of the Rocket Pool community and be or ETH holder directly.
That's so great to hear. And I really hope that proposal goes well, and I'll be talking about it on my show tomorrow after you write your proposal for that. So that's really exciting, Marc. It's been an absolute pleasure speaking to you about all of this. Thank you so much for your time and for explaining to our listeners about how our ETH and RPL is going to work on Aave. I know that a whole bunch of people are very excited about maxing out those limits very, very quickly. And it's going to be really wonderful for Aave and for RPL. Yes.
There's also one thing, and maybe you can, if you don't agree with me, you can maybe put on the YouTube comment your opinion. Obviously, I'm not an expert on everything, so maybe I'm wrong. But I have the feeling that right now, if you want to stake, and you talk about it a bit earlier, you will need around 18 days to wait. The staking queue is getting longer and longer. So the withdrawal queue is completely empty. So if you want to unstake in 24 hours, you will get your ETH basically on the Ethereum network. But the staking queue is like actually growing over time. Mm-hmm. And I have the feeling that the staking queue will continue to grow over the past next few months because the risk associated with staking is going down over time. Like because before Shanghai, it was like extremely risky because you don't know when you can withdraw. Now, the risk went down quite a notch with Shanghai, but still it's a new technology and a lot of people are sidelined and are waiting to see what happened to start staking. But I do expect that the staking queue will probably reach 1 month, 1.5 months, maybe 2 months waiting time to actually allow people in. And I do believe that we will see premium on liquid staking token come back, because if you wait for 2 months and something provides you like 6% yield per year, you basically leave 0.5 yield on the table, because 2 months at 6% per yield is basically 1%. Sorry, my math was wrong, but you get the idea. You leave 1% on the table. So if you can buy your liquid staking token on the secondary market to 1% premium, you basically don't lose money. If you buy it more, obviously you lose money, and but you don't actually lose money. So it's completely justified in terms of an economic perspective to have a 1% premium on liquid staking token if that's the case. And if the queue is 3 months, 6 months, it's completely justified to have a premium. And on top of that, you have speculation and FOMO and this kind of effect. So maybe the premium factor will be even bigger than that. So my prediction, I do expect that the deposit queue pool will actually fill over time, because people will want more and more, especially with emote, to access Rocket Pool ETH without slippage. So they will deposit ETH directly in the pool. I expect more and more people to buy directly Rocket Pool ETH on the secondary market, especially if the pool deposit pool is full. And I expect premium to exist on the market. So I think there will be an interest as well to deploy pool and run the arbitrage bot to get some Rocket Pool ETH and sell that or ETH on secondary market. So I don't know what you think about that and what the community think, and feel free to comment on the section on YouTube or on social media. But I have the feeling that premium might come back. Not 3 or 4%, but 1 or 2%. That's definitely something that can happen.
I can talk to you about that now, actually. So with Rocket Pool, we changed from 16 ETH mini pools to 8 ETH mini pools, and anyone who was a staker from before is able to do this. They're able to convert and get a credit from the protocol to run another validator on top, basically. So after Shanghai happened, we had an update on Rocket Pool called Atlas, and after Atlas we had around 5,000 or 7,000 new validators coming online, and a whole chunk of that was people converting from their old validators to the new ones. About 40%, I think, of people that were validators from before have updated to make it into 2 validators. Now that means about 60% are still waiting on the sidelines to wait. And the Rocket Pool, there was one member of our community called Romana who made something called a Rocket Aave bot. So as the premium goes high, they're incentivized to start a new validator. And before, what would happen is when there was a premium, you would get that premium from 16 ETH that you're borrowing from the protocol that you would getting from the protocol. However, now that premium will be on the 24 ETH that you get from the protocol. So as the percentage of premium goes up on the Rocket Pool protocol, more and more of those people who are still waiting on the sidelines will be incentivized to get that premium and capture that premium and start a new validator, because we've literally got like hundreds of thousands of ETH worth of demand just waiting there to take advantage of any premium that comes up like this. And I think that will happen for Rocket Pool, is that as that premium starts to emerge, and the higher that premium goes, the more incentivized current existing node operators are to move onto their LEB8s, which is what we call the 8 ETH validators, to capture that premium. So I hope that we get a premium, because that will mean that Rocket Pool has more than doubled in size compared to pre-Shanghai. We have a lot of demand for staking on the Rocket Pool protocol right now, which is why things like eMode and other things that are happening as well, like Ledger wallet integrations, etc. We're expecting a whole lot of demand to come from there to help eat the demand that's already there. We've got a queue in Rocket Pool that's over 2,000 validators long, just in Rocket Pool, and that was about 15% of pre-Atlas total amount of validators we had. So Rocket Pool's undergoing tremendous growth, and Aave's eMode I think will help with that a huge amount. So the premium, I don't know if it's going to come, at least for a few months. I hope the premium comes back, because it means that Rocket Pool's grown so much. But then that's when the discussion will start happening about LEB4s, that we mentioned about the 4 ETH validators. Those are not in position yet, because we need like forced exits and other things that happen on the Ethereum main chain. But
Mhm.
if that happens, then we'll undergo a whole new wave of growth as well, because we'll just get even more efficient. So Rocket Pool's future is really bright. We like to say the future's bright, the future's orange, because that's the color of Rocket Pool, is orange. But there's some really, really good things happening with Rocket Pool in the coming weeks, months, and years even. And I'm so happy that protocols like Aave and the work that you're doing, Marc, is really helping Rocket Pool grow and reach, what we want it to reach. Just before we finish up this call, I don't know if you know or not, but you mentioned earlier that you'd like staking entities on Ethereum to be capped at like 20%, basically, right? A few
Yeah.
months ago, the Rocket Pool
So
community.
basically, I'm supporting Rocket Pool until you reach 20%.
Yeah,
Then
well,
I'm basically a traitor, and I will help a third decentralized
no,
one
so
until you.
no, let me explain to you
Sorry
what.
if you are a Maxi.
Let me tell you, look, okay, so I'm as maxi as RPL maxi as they come, right? Like I literally have a show about Rocket Pool. Even on my show, I promote services like Stakewise version 3. I've worn a Stakewise shirt while giving a Rocket Fuel episode, because we voted in our DAO, we voted to cap Rocket Pool at 22%. And as we approach 15%, at that point the community will start like putting in mitigation actions into place, like promoting other decentralized services. There's details in that, but that's like a simplified version. But I'm really happy, if we reach 20%, then I'm happy to be promoting other services alongside with you, like if any of them are sufficiently decentralized, permissionless, all of that good stuff, then we'll be doing that together. Like you'll see me promoting people like Stakewise, if Stader get better, Stader, all of these services like that. So we all want Ethereum to succeed, right? And the Rocket Pool community, first and
Exactly.
foremost, is an Ethereum community. And we want Ethereum to succeed before we want Rocket Pool to succeed. And it's really great that we're working on that together. So thank
And
you
I
so
think
much.
we can
Yeah,
succeed together. It's all about like growing the pie. So there's two
exactly.
ways to do things. So the size of your slice in the pie,
Mhm.
and also the size of the
The
pie.
pie,
And
exactly.
sometimes if your slice is the same size but the pie is much bigger, you make a lot more cake into your plate. So
Absolutely.
I
Absolutely.
think that should be like the growing mindset in the community.
Mhm.
Obviously, Lido, I have no problem with them, but right now I'm pushing as much as I can Rocket Pool, because I want this cake to this pie to have like a more equal slice, and
Yeah.
not an actor that has too much.
Yeah.
But at some point, I will, because I wish all the success I can to Rocket Pool, you will
Yeah.
reach that threshold, and I will start pushing all the decentralized protocol. And I hope at some point we all support that together, because at the end of the day, we are here to support Ethereum staking. We are here
Exactly.
to support proof of stake and the
Yeah.
success of the Ethereum infrastructure and ecosystem.
Yeah, and I'll be there doing that with you. So I think that's a really nice note to finish on. Is there anything else, Marc, that you'd like to share as like finishing thoughts before we wrap up this call?
We didn't talk a lot about this, but there's going to be a lot of effort in the future to bring Rocket Pool ETH and RPL on layer 2s. Maybe people that listen to us don't have the financial capability to use Aave on layer 1 to use Rocket Pool directly on layer 1. You guys matter to us. Obviously, we have to start somewhere, and we start where there's the more liquidity and the more infrastructure, the most mature infrastructure. That's normal to start that way. But we, as we say at Aave, we leave no ghost behind. So the ghost is our logo. It's behind me, like right
Yeah,
here.
I see. Yeah, yeah,
Yeah.
yeah,
So we leave no ghost behind. You guys matter to us, and we are developing Rocket Pool support on layer 2, on Arbitrum, on Optimism, on Polygon. You will be able to use Aave and or ETH and do crazy leverage strategy if you want, even if you only have $50 or $100, and that's completely fine. I'm not building only for the rich. I'm building for everybody.
I'm so happy to hear that, Marc. Thank you so much for taking the time to explain all the amazing things you're doing on Aave for Rocket Pool. I'm sure my listeners are going to absolutely love this episode, and I'm so excited about everything that's coming in the next 11 days. Like, it's amazing. So thank you so much, Marc. I hope you have a lovely rest of your day, and I'll be talking about you on Rocket Fuel a whole lot in the days and weeks coming. So we'll see you there.
See you. Thank you.